goes back to what I was saying earlier. The best way to invest in retail and apparel is to feel like you don't have to invest in them, or you sort of wait for something to happen. And I found sort of success in brands that aren't dominant, but are very, very stable. And so the two investments that have worked out for me have been Gap, which I think most people know, and Carter's, which is the dominant brand in baby clothes. I think they have something like 20-30% market share. And if you mention Gap to typical investor, you kind of get like an ick, right? It's like Gap's been around for a while. They had their heyday. They've done well. If you look at their revenue over the past 15 years, it's remarkably stable. It's sort of in the ballpark of $15-16 billion. And you wait for a time where the valuation just doesn't make any sense. Where for me, I think investing in Gap, 2011 or 2012, when prices got very, very low. These companies faced short-term issues with high cotton prices. And so the price of cotton had quadrupled in a short period of time. It was at a 200-year high. And so a reasonable long-term investor can stay back and say, okay, I don't think cotton has inherently gotten any more expensive to make. Maybe this is a short-term phenomenon. And you saw the prices of a lot of apparel companies get hit really hard. And people just assumed that these prices were so low that people just assumed that these brands were deteriorating very, very quickly. And so I was able to make an investment where I saw, like, if I projected very conservative assumptions 3-4 years out, these businesses will be fine and well and earn more than they are today. And the valuations, I purchased them, I believe Gap was something around, adjusted for cotton prices, was something about 7-8 times earnings, and I believe Carter's was something about 10 times earnings. And these are businesses that were growing, had great brands, but you had to wait till them to buy a discount. I think it's hard to buy these companies at a high premium unless you have a lot of confidence that they're gonna grow their appeal for a long time. And we haven't talked about this yet, but I know near to value investors' heart is capital allocation. And so one thing I look for is companies that are very good capital allocators, that are making smart acquisitions or no acquisitions at all, it's even better, and returning a lot of their capital back to shareholders. And so in retail, you tend to see, for younger retailers, you don't see very good capital allocation. You see a lot of dilutive companies, but occasionally you'll see some phenomenal capital allocators. Gap is a company where there was an 18-month period during this cotton crisis where they bought back something like 25% of the company in a very short period of time. And there are very, very few companies that have been able to do that at all. And so I think if Gap's, the name of the company had been Industrial Pump Company, and you saw the margins, the returns in capital, and buying back a massive amount of stock, I think the shareholder yield at the time was low teens, mid-teens, which is extremely rare for any company to see in this environment. You saw that's a situation where it's sort of I thought it was a no-brainer.